These three stocks that I'm going to mention in this video are undervalued. In my opinion, these stocks are not only undervalued, they're underlooked. People are not paying attention to where value is, especially in a market where stocks have sold off, they're cheaper than they were. Most people are like running, they're like going to the door. They're like, get me out of here. I don't want to be in these stocks that are falling down. But that's your opportunity. When most people are running for the hills or whatever that saying is, you should be buying up. You should be taking advantage of other people's mistakes. Okay, let's jump into the video. Let's not waste any time. The first stock I'm going to be covering is going to be PayPal. So you can see my portfolio today doing pretty good. PayPal is a stock that today really isn't up that much. In the last month, it's down 13%. In the last 6 months, funny enough, it's still down 13%. People are upset with PayPal. But let me tell you, in the next few months, PayPal could finally flip the switch, turn everything around completely, and not be this kind of fading fintech story, but more so come back into a comeback story that prints investors a lot of money. After years of being left behind, this company just started finally showing signs to me internally, not the stock, internally, what they're doing, the things that they're changing within their business. And I think the numbers that are going to be coming up for earnings next quarter, 2 quarters, and next year is going to be really life changing for this company. Because if you own PayPal shares, or even if you plan to, the next few quarters are really going to define if the stock has a comeback or not. Look, in the last 1 year, the stock is down 30%, and the stock right now has a PE ratio of 12, literally less than half of the S&P 500. This company is trading for levels which, when I was studying finance, one of the most successful investors, entrepreneurs, hedge fund managers who came to speak in my senior year, pretty much seminar, our professor invited him. This guy manages billions of dollars. He was driving a really fancy car, and I really looked up to him. He came in, his license plate said 10 PE, okay? It said 10 FCF, which stands for free cash flow, but I talked to him and he said 10 PE, that's the golden ratio. Right now, where PayPal is trading at for 12 PE, that is dirt cheap. That is stupid cheap. That is so cheap on a value basis that if this stock were to just be valued where the S&P 500 is, it would have to double in value just to be on par with the average S&P 500 company. It would have to double. The market cap is 57 billion. So this company is not a small company. It's not a big company. It has the opportunity to become a $100 billion company. What I'm looking at is double-digit growth in 2026 if partnerships that they are building will execute. Because I did some research, I did some digging. CEO Alex Chriss has begun cutting costs aggressively while building growth via OpenAI, Venmo, and branded checkout expansion. So forward guidance, that's really the key. If management signals stronger digital wallet adoption or AI-driven transaction margins, then the re-rating is going to start immediately for PayPal. And some of the strongest secular tailwinds that they have is PayPal in digital payments. PayPal is in digital payments, right? But it's also a category that's expected to grow significantly over the coming years. So for example, one analyst noted that the payments industry is expected to grow 11 to 21% per annum for the next 5 years. Okay, so if PayPal can capture a lot of that, their revenue is going to rise. Now, the company's business model benefits from network effects as well, which is really strong. I look at companies like Uber, Airbnb, PayPal, right? There was PayPal Mafia, right? Elon Musk, huge contributor to PayPal, right? So this company is built on a very strong foundation, and it contributed to a lot of Elon Musk's money, a lot, okay? So PayPal has network effects. So the more the users are on PayPal and they're using PayPal, right? The more users, then the more merchants you have as well, right? There's two sides of the story, right? More users, more merchants, okay? So that's where the network effect really comes into. So they have e-commerce, mobile payments, and then checkout anywhere. So this kind of combination right here is a very favorable backdrop. So establishing scale and monetizing opportunities is something that PayPal is rapidly expanding into right now. And that expansion into, monetization of e-com, mobile payments, checkout anywhere growth, all of this is going to create a further network effect. So in addition to their core payments, there's also another thing that I was looking at which is their value added service. So it's checkout business, the wallet business, which is Venmo in the US. By the way, really interesting. I used to use Venmo back when I was in college. They also have buy now, pay later, crypto adjacent services, and a lot more. So they're trying to really turn the ship around and become like a Meta, right? Not as big as Meta probably, but just like Meta was not in favor. Like, I can't even tell you how interesting this is. Like, look, check it out right now. Okay, we're gonna move from PayPal to Meta real quick, because if PayPal can follow the Meta trajectory, I want to show you what's possible. Because not that long ago, literally, I was like looking at Meta, and Meta was right here. Nobody wanted it. This is not that long ago. It's exactly 3 years ago. Meta stock went from 100 to 600. 100 to 600, right? So this is a place where I was trading Meta, and I'm gonna have a video soon on how I did trade back in this period, which added up to a lot of my results. But I wasn't perfect with Meta, right? So now I'm trying to be more perfect. It's impossible to be perfect, but now I'm trying to really get in on a stock like PayPal, because this is kind of where PayPal can be. And even if it doesn't have the same result as Meta, which is it doesn't have to. It doesn't have to. They don't need to make as much money as Meta. They just need to be on the growth trajectory that they're on right now, and the stock doesn't even have to go from 100 to 600. Just think about turning, into half these results, right? If you get half these results within 3 years, you'd be wild. You'd be out of your mind to not be happy with that, right? So that's kind of what I see with PayPal. Let's move over to the next stock, which is going to be AMD, a company that I've been looking into and investing in. Just long-term investing. I'm not doing any options on it right now. I did recommend to my community to do call options. This is a while ago, and I recommended to do call options a lot earlier in the year. It was like somewhere around here, and we printed. We absolutely printed, and I think that's the reason why a lot of students have been giving me reviews lately and just being super happy about the results for the year. Like if they did some reflection, a lot of my students just were reaching out to me. Kind of, it's the holidays and stuff. Like, yo, man, Henry, life-changing stuff. Like, here's my portfolio, here's images. My Discord is full of that. And a lot of it is AMD. Like AMD, I bought Leaps and I held Leaps, and it was tough because like it wasn't really doing a whole lot. Let's actually go year to date, because I was actually a lot earlier, like even here. I was recommending it, and then yeah, like it was tough. But again, tough is fine. It's all about long-term return. So right now, you see where AMD's at? It has had a monster return. So if you've been following me for any period of time, like if you've been following me this year, man, we've been making that juicy hand over fist money. And now I think there's a really, really good opportunity given how much AMD has fallen. It's fallen a good amount. So right now I see it as a huge opportunity. They just posted $9.2 billion of revenue, which is up 36% year over year. They had very strong data center revenue. Clients and gaming segment did extremely well. So the data center revenue specifically was $4.3 billion, which is up 22%. And then client and gaming segment delivered about $4 billion, which is up 73%. So they have kind of like a profit pool here going on within the client and gaming segment. So they're doing very, very well. I mean, my laptop here has AMD here as well. So if you're thinking about AMD, I think right now, very important time to actually be a buyer, because if you're excited about buying stocks when they're at very, very highs, and you're just following all these YouTubers who are just hyping up, like, I'll buy this. We're at 52-week highs. We're going to go higher. We're going to go higher. Yeah, you know what I mean? Like, I'm not a fan of that. What I like instead is when I see value. You want a deal, right? I want a deal, right? I want to go to the Turkish bazaar and like negotiate, or go to India and negotiate, right? Every penny matters. I'm just joking. I'm not like that. But you know what I mean? Who doesn't like a bargain? There's nothing wrong with that. Nothing wrong with that at all. So if you like a bargain, if you like shopping and using coupons, all right, I'm gonna get back to the point. Who doesn't like a bargain? That's all I'm trying to get at. So simple, man. That's why we've been making crazy money in the community. It's because I've been spotting opportunities early. I've been doing this for 10 years, so I better be able to spot opportunities. Well, look, AMD, they recently reported that they have projected revenue, right? That's a very important metric. When you look at a company, what's their projection like? Okay, we get it. They made a lot of money in the past. The projected revenue growth, though, is 35% per year over the next 3 to 5 years. Next 3 to 5 years, we're going to be printing money. AMD could be the next, literally, like, could be the next NVIDIA, right? Not to that degree, but it can have similar results, similar returns, right? Could be the next Palantir. Palantir did very, very well. Recently, hasn't been so well. But I have my average cost on Palantir. Let me actually show you my average cost on Palantir, because I've been really early on this stock. You want to be early. You don't even have to be like the best at timing. You don't have to be the best option trading at best strategies. You just literally need good stock selection. I'm up 612% on Palantir. Average cost of 22. So that's what I'm looking at for AMD. I got it at $90. If you're new to the channel, welcome. Uncle Henry here is going to show you how to catch trends early, how to ride stocks that go up, how to spot good opportunities, how to use option strategies to generate income, create passive income so you don't have to, work forever. So you have a plan and a journey that will take you to retirement. That's what I do. That's my goal. That's my mission. That's my passion. That's why I'm here. That's why I'm making this video. AMD, great opportunity, stock that I would definitely look into. And I'll also look at selling puts for entry. This stock is down a good amount. You can easily look at this. Look at this bounce. Look at this bounce, right? Let me actually show you a quick sell put real quick. Then I'm going to move over to the third stock, okay? Selling puts, very smart strategy because you can collect income and get into a stock and kind of use that sell put similar to a limit buy, okay? So if you want AMD at 210, you can put a limit buy. But why would you put a limit buy? You can just go to trade AMD options. And now we're going to just sell a put option. I'm going to go sell put. Look, you can go short term if you want. If you want to go short term, you can. Go for like next week, for example. Go short term. And then you can just do the 210 right here. That's better than buying the stock at 215 if you're a value. If you're trying to save and hedge and protect yourself and be really conservative, better be selling puts. 210 right here, 38 delta. Why not? 2,000 volume. Kidding me? This is good money. This is real good money. In 11 days, do the math. Take this amount, take 590 divided by 20K. Listen, hold up. You're like, whoa, can I lose the max loss? No. That's if the stock were to go to zero, which is not going to happen. Just be prepared to have 20K if you're to get assigned, but the max loss it's not really that accurate because that's if the stock went down to zero, then yeah, you would have that max loss. But stock's not going to be going down to zero. That's practically impossible, okay? But look, the return here, you just do the math. Do 590 divided by 20K or 600 divided by 20K. That's 3%, right? That's around 3% in 11 days. Man, I'm hooking you up with a nice 3% return and you're getting into a stock at 210. You tell me how that's not a good deal for a stock that's pulled back a good amount, has a great future. All right, next stock is going to be Chipotle. Chipotle is very, very interesting. Now, I know like the stock is down and a lot of restaurant stocks are down and I had a small position. I mean, my Chipotle position, let's take a look. I think I'm around 1%. Position sizing, super important. If you are like, oh, I'm down a lot of money because you don't know how to do position sizing, you're not part of my community. You don't know what kind of position sizing I got because I can't put up the trades all the time live on YouTube. It's always delayed. Some of my videos get taken down. YouTube's been cracking down. Like, it's hard to make videos. I can't even put out all the best stuff that I got. I can't put it out. YouTube does not like the financial creators at the moment. There's a lot of stuff that you can't talk about. If it's an aggressive strategy where I made money, if I show the proof, YouTube doesn't like it. My videos have been taken down. I spent days making the videos. So if you want to see everything, now you got to come on Discord. Like, you got to. YouTube's been cracking down, man. It's been tough. A lot of my best strategies can't even talk about them. It sucks. But look, position sizing, very important. When I make my trades, I tell my students right away, this is the position that you got to put on it. If the position is bigger than that, beware. That's a mistake. That's a mistake. I got 1.44% on Chipotle. I am down. I admit it. I'm down. I didn't make money on Chipotle. I have in my lifetime because I bought this when the E. coli outbreak happened years ago. I was in college. But lately, I'm down. I lost money. Honest truth. But do I think that this is a good value stock? I think so. My average cost is 39. I'm not that much down. Like, I'm in the vicinity to make the money back, right? I got 32.5 covered calls, so it's an out of the money covered call. That's managing covered calls will be for definitely a separate video, not to make this too long. But I'm generating income, and I think Chipotle is a great stock because it has pulled back, but it has a very strong growth and has very high addressable opportunities because Chipotle is projected long-term to expand massively. So Chipotle is projecting long-term expansion of its restaurant count, which, by the way, came from management. They have cited a target of 7,000 locations. 7,000 locations in the US and Canada, and higher average revenue per unit over time, right? Everyone knows there's inflation. The price of Chipotle is going up. It ain't cheap, and a lot of people are cutting down because it's not cheap. It's not cheap. But the company's digital business and Chipotle pick-up lanes are actually growing pretty well. So in Q3 2025, digital sales were actually up about 37%, and it was sales In Q3 2025, digital sales are about 36.7% of total food and beverage revenue, which is pretty good because it's higher margin, it's more predictable, and it's way better for Chipotle. They have a strong brand and they have very good positioning in fast casual dining. So Chipotle's fast casual model, which is higher quality than typical fast food, quicker than full service, continues to be really awesome for people that are busy during lunch, for people that just want a quick meal, right? For date spots, whatever. This business is very strong because it's quick, it's easy, but it's not like super, super unhealthy like the fast food, right? So their menu and platforms are well known. They also have lots of different choices, right? So there's choices for keto, there's choices for high protein, for etc. Right? There's many choices, which is very good because they can hit a large, very large part of the consumer. So the only thing that I have to mention is they do have slowing same-store sales, and they also have rising costs. Two things that are just not that good. So it's kind of a fight. It's kind of a battle for Chipotle, but where they're trading at right now, I don't think they deserve to be that low. Maybe they deserve to be that low right now, but in the future, I can see the stock becoming a $50 or $60 stock. In the macro environment, is pretty decent. Yes, consumers are pulling back on dining out, especially in fast casual, because the pricing is not so cheap anymore, right? When I was in America 6 years ago, I don't really go to America anymore. I spent a lot of time in Eastern Europe, in Dubai, and yeah, Eastern Europe, Dubai. I might go to Asia for a little bit here as it's getting very cold in Europe. But when I was in America, I remember Chipotle being $8.95, right? And I actually remember I was so broke when I was in America. I was in college and I had some money, but I was trading options and I really didn't want to pull anything out of my portfolio. It's really, really cheap. So, because, I didn't have much money or income and had to support myself and stuff like that. And I remember Chipotle being a treat for me at $8.95. So, kind of like thinking about it for people, for an everyday person, if Chipotle is like $16, $17 now, I get it. I get it. That's like half an hour of someone's work on average. So it's not cheap. It's not cheap, and that is contributing to some declining sales. However, if we look at Chipotle, let's go to the technical chart real quick. I'll just show you the technical chart of where it's been and where I think it's heading, and why I invested a good amount of money, $62,000 currently in Chipotle, is because let's go to the chart here. Let's show you. Let's go to 6 months. Okay, I'm going to show you something really, really interesting. It has had it's taken the elevator down twice, right? So it was looking pretty good here at 57. Basically earnings, big crush, investor lost confidence, took the elevator down, then it took the stairs down. Took the dog for a walk down the stairs, right? Took the dog down for a walk on the stairs, and the dog said, I don't want to come home. I want to continue taking a longer walk, please. Owner's freezing, and investors are getting cold. They're getting cold feet. I'm like, this thing's not doing nothing. And that turned out to be a good reason because same-store sales decline. And I'm telling you, when same-store sales decline, again, I'm bullish on the stock, but I just got to point out the objective truth. When same-store sales decline, boy, that's bad, right? Because on a long-term basis, if same-store sales are not growing, same-store sales means people are eating at that same location, not different location, that same location, then that could be a bigger structural issue, like a structural issue where just people are not liking the food maybe as much. That's a big issue, right? So is that true? It's hard to say, but same-store sales going down could be pricing, and that's fine. If you think about it, just one before we wrap up with the video and my thought process here on Chipotle, why it's a good purchase. Think about this. This is an extreme example. It's not going to happen. If Chipotle doubled their prices overnight, okay, and they went to $30 per bowl, which is extreme, and let's say that the brand loyalty that they have and the consumers like Chipotle so much that 20% of people stop going, but the price is doubled. Are they going to make more money? Answer is yes. The answer is yes. Is that going to happen? Well, that's obviously extreme, and that's going to be too high of a bump. But do you see the example I'm trying to make? It's really a fight for Chipotle. How loyal are the people, and how fast can they raise prices? And that's business for you. That's business for you. So same-store sales going down, not good. But I'm just telling you, I do get it. I get it. It's because the prices are going up. And then, yeah, now they had this other kind of crash here, and the stock is just kind of really hovering and kind of like flailing, like like a fish, like Magikarp from Pokemon, right? It's like can't do nothing. Like it's like a Magikarp, right? Doesn't have any attack moves, right? If you play Pokemon, comment down below. I was kind of looking at some Pokemon videos. But the stock where it's sitting at right now, $32 per share, I think, man, we're going to be going up from here. $37 is the moving average, so I'm looking for a $5, $6 rise here, and that's no joke. $5 to $6 on a $30 stock. Do the math. Let's make some money. Bicep over tricep. See you guys in the next video.